Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and today we are going to talk about everything we could expect to see this upcoming week within the markets. And I hope all of you are having a wonderful weekend. And I really do mean that because things have been pretty harsh for us bullish investors most recently, and things looked like they were going to be very bullish to start November as we saw these major gap ups in both of the major indexes. This was, of course, because of the anticipation for the Federal Reserve having their FOMC meeting and the rate cut, which did happen. But since that moment, we have seen the markets bleed and we have seen all those gaps get filled. And it's not only the major indexes that have had some bleeding, but also a lot of different stocks and cryptocurrency. Bitcoin now trading under $100,000. So right now there's a lot of panic within the markets. Right now we are in levels of extreme fear, and we do see the volatility index is nearing 20, which does show that the markets right now are pretty volatile. And this weekend I'm seeing a lot of this news circulate on financial media, and that is that the New York Fed had a secret emergency huddle. So I guess a secret emergency meeting. I don't know how it is secret if this is the major headlines going on and everyone's talking about it. But anyway, they had a meeting about the fears of the brewing liquidity crisis on Wall Street. And I'm pretty proud to say that we were actually talking about this a couple weeks ago because of the repo market. We saw the Federal Reserve pump $29 billion worth of liquidity towards the banks because right now the banks are having a liquidity crisis because of the government shutdown that just happened. So things should be getting better here in the short term. But once again, the Federal Reserve has shown that they will not allow the markets to fail by pumping in this liquidity. And the reason why I say I'm proud that we're talking about this a couple weeks ago is because during this time, everybody was talking about the big Michael Burry short. This is all I saw on all of financial media. Everyone's saying, oh no, he's shorting Nvidia and Palantir, and everyone's talking about this big AI bubble, and that's the reason why the markets were dropping. But they were failing to see the bigger picture, and that is that it is just a liquidity crisis. But now I see a lot talking about what has recently happened. So some fear, uncertainty, and doubt about this sparking within the markets right now. But myself, I am not too concerned because once again, the Federal Reserve has already shown their hands by cutting rates in September, October, providing liquidity most recently. And right now, going into December's meeting, it is a coin toss whether or not the Federal Reserve will cut. I do believe they will cut, but even if they don't, we have the next meeting in January, and I feel that they should cut at that next meeting. So I do believe they will cut in December, but right now, some speculation because, of course, of that delayed economic data. Which big events to watch for? The big date when it comes to economic data that's really most notable for this week is going to be on Thursday, because we are going to finally get the September jobs reports. So 2 months late, we're finally going to get these reports, and most are not expecting for these reports to be good at all. With this being delayed and what we have already seen in the job market are all the turmoil, most likely these job numbers will come out bad. And so there is some fear about this. This is going to be all on Thursday, but I do think that this economic data comes out at a key moment because it comes out right after we see Nvidia's earnings on Wednesday. So we're going to have Nvidia's earnings on Wednesday, and this could be a big sentiment shift for the markets because right now a lot of fear, uncertainty, and doubt. Everybody is talking about this big AI bubble, but I feel that this is just a bunch of fluff because absolutely nothing has changed with these technology or AI companies. There's been a lot of hyper bullish momentum within these plays because, in my opinion, again, this is never financial advice, just my opinion, what I see in front of me is we are going into a society society all around technology, data, AI, robotics. I mean, ChatGPT recently has become so crazy since 2022. All the innovations we have seen there, robotics, self-driving cars, there is just so much. NVIDIA, the top technology company in the world right now, NVIDIA constantly beats on their expectations. They are expected for this quarter to be their largest ever, and I do feel that if they beat at this quarter and give improved guidance, that we could see a big shift within the sentiment around AI technology and all these volatile plays. And when we do look at technical analysis, both of the major indexes have been chopped down most recently, but still at that 50-day moving average. So if they continue to trade right at this level or elevate back up, this will still show that the bulls have control in the markets. And there are a lot of plays that recently have been chopped down pretty bad. A lot of plays sitting low on the relative strength index and on the MACD. So myself right now, I am more bullish than ever, and I want to invest into plays when there is fear in the streets, when there is blood, when there is panic, because I do know that these markets will rebound. And what I am watching right now is the Federal Reserve and what they recently did by providing this $29 billion worth of liquidity to the banks, this emergency meeting we recently saw with the New York Fed, and then the next rate decision, which is coming in December. And again, I do feel that the Federal Reserve will cut at this meeting because it doesn't make sense for the Federal Reserve to start cutting, for QE to really start to kick up, and then for them just to pause the money printer. We really are going into a larger cycle of quantitative easing, and I do feel a lot of investors are just watching the price of these tickers in the short term and really missing the bigger picture, which is we are about to get a massive expansion of this monetary supply. And, you know, with the Federal Reserve, again, December, it is a coin flip. I do expect them for them to cut, but even if they don't, I do think they will in January. But just a little bit of a thought and just kind of the position that the Federal Reserve is in currently and why I feel that they can't do anything but cut. I feel like the Federal Reserve can't even do what Paul Volcker did in the 1980s. So if we're talking about controlling inflation, if that is the main concern right now, and the reason why the Fed, you know, wouldn't cut rates once again, well, if Jerome Powell were to do the opposite and raise rates like the former Fed chairman Paul Volcker did in the 1980s, the markets would absolutely lose it and we could see a true collapse. So much depends on the markets right now. And with inflation, you know, some are hopeful that the markets could come down so they get better asset prices, but I just don't see that because the Federal Reserve, when they bring down rates, this is very stimulative for the markets. And when rates go up, this could crash the markets. And if Jerome Powell were to do what Paul Volcker did in the 1980s, we would see absolute chaos. So right now I am more bullish on the markets than ever, especially where there is so much fear within the markets because so many are talking about this big AI bubble that we are in, but really we are in the everything bubble, which was started many years ago with quantitative easing. And I believe that the Fed is going to be our friend and not take their foot off the gas pedal. And also on the earnings calendar, we do have some other big players reporting earnings this week, including Home Depot. We have Target, Lowe's, and Walmart. So these are some big retail stores which could give us an idea of what the sentiment is. So these will all be interesting plays to watch. Also, again, I am more bullish on the markets than ever, and that is because I am watching what the Federal Reserve is doing, and that is they are cutting rates, being more stimulative, and providing liquidity to the markets. And we should see a massive liquidity boost here with the government shutdown finally ending. But I would be curious to hear what you all think in the comments section below. So please drop a comment. Please let me know what you think going into this week. Are you bullish or bearish on the markets? I always love to hear from all of you. Also, please leave a like and please subscribe to the channel if you haven't already done so. I thank you all so much, as always, for your viewership, and I will see you in tomorrow's Daily Talk of Stocks.